Hello, everybody. We are back again today with Berlin Chinchilla with EXP Realty. I am Edward Foy with H Mortgage. We wanted to share some information on a few big announcements that were made over the last week or so. The first topic that we're going to cover is the Fannie Mae announcement regarding no minimum score requirement. Berlin, how are you today?
I'm doing good, thank you. How are you, Eddie?
I'm good. So I'm sure most of you guys out there have heard, in Berlin, I'm sure your social network feeds have been filled abundantly with the announcement from Fannie Mae. I believe it was last Wednesday. They announced that there's no longer going to be the minimum score requirement of 620. And I thought this would be pretty good to elaborate on, since a lot of people hearing the news, they get pretty excited about it. And although it is exciting, the first thing that I think deserves mentioning is that it's been over 8 days now. Today's Thursday. So it's been over 8 days and I've yet to see one lender really comment much on it, let alone change any of their products. And what that tells me is that my initial knee-jerk reaction was probably correct, in that although this is good, it is good for people in the lower score spectrum, because there's no longer going to be the specific score requirement of 620 on conventional loans. That your credit as a whole is still a very, very important piece of qualifying. So it's important that everybody out there understand that although there's no longer going to be that specific threshold of 620 that needs to be met on conventional loan, your payment history and your credit as a whole is still going to be viewed and looked at. And we will keep everybody posted on how things continuously develop. And as lenders start to make any announcements or changes, we will keep y'all abreast of that. But Berlin, what are your thoughts on it?
Like you said, it is important that people do keep in mind that the credit as a whole is still a important piece. The debt to ratio, I'm pretty sure, to get qualified.
Yeah.
And correct me if I'm wrong, it's supposed to start on the 16th of this month.
Right.
Of November.
Right. So I believe it's effective. And just to kind of further elaborate, this is regarding what we call DU, which is Fannie Mae's desktop underwriter, which is an automated underwriting system. So just about any time you submit a mortgage application, most lenders or brokers are going to run your automated underwriting through DU and LP are the two most popular automated underwriting systems. That would be Fannie Mae and Freddie Mac. And this announcement is regarding that minimum score requirement, which up until November the 16th was or is 620, and now they're going to remove that requirement. So again, that's a good thing because it does broaden opportunities for people out there. But I think the biggest takeaway or the biggest reminder for me when I see announcements like this is that it can get frustrating for people that are having trouble qualifying for loans. Sometimes people have a tendency to kind of throw their hands up and say, okay, well, I don't qualify. I guess I'll work on that next year. This is just another reminder that things are constantly developing and changing, and make sure that you keep your thumb on the proverbial pulse of what's going on, and that you're always trying to get a little bit better every day, because as you can see, when announcements like this are made, it can quickly change the market, and it can go from a predominant seller's market where we have a lot of inventory and not a whole lot of buyers in the marketplace. And then you hear an announcement like this and people kind of spring into action. They're like, okay, I'm ready to buy a house now.
Exactly.
So if you aren't ready when that shift occurs, you can end up missing out on an opportunity. So if you're waiting for a sign to get back into working on your credit and preparing to buy your next home, whether it be your first home or an investment property, this is a reminder that, believe it or not, the system does occasionally change and work in your favor, but you have to be ready when those changes occur in order to spring into action. And that's what Berlin and I are here for, to help you get ready. Any other thoughts on that, Berlin, or did you have any questions about that Fannie Mae announcement before we move on to the next topic?
So everybody is aware, which loans will this be affecting?
Great question. This is primarily impacting conventional loans. We've touched on this on some of our previous videos. Typically, if you're at a 680 or less, I would argue that you're probably going to get better pricing on a government or FHA loan anyway. However, as I've mentioned in the past, every situation is different. So depending on how much money you're putting down and your plans for the future, that can change how things might benefit you. So although I would say that typically if you're at a 680 credit score or under, that most people are going to gravitate towards the FHA pricing, there are some rare cases where a conventional might be more appealing. Now, the reason why I said it primarily impacts conventional is because when there are significant changes in the marketplace, it can impact everything, right? So although this is an announcement regarding conventional loans, it's still new and we have not yet seen how lenders will be reacting. Let's say they come out with new products that are more competitive in that lower credit threshold, then that could impact and change how FHA loans are structured. So it could possibly have a ripple effect on all products, if that makes sense.
It does. And thank you so much for that information.
Yeah. Great question. I'm glad you brought that up because, a lot of people, they hear announcements like that and they assume that it's just a blanket impact on everything, which there is some truth to that, but it's primarily conventional loans. If y'all have any questions out there about that, we're going to move on to the next. But if you guys have any questions or you want to share your thoughts on that, please comment below or direct message either Berlin or myself, and we are happy to see how this may impact or change your situation. Another big announcement that has been floated out there is the 50-year mortgage. This one has been very, very popular, a trending topic. And I don't know if it's for all the right reasons just yet. There's heated debates going on. And again, these are just ideas at this point. No one has put together specifics. I think the administration has shared some thoughts and put some feelers out there. And I think with the reaction, that may quickly be changing. But the 50-year mortgage, Berlin. How do you feel about it? What are your thoughts? What are your questions, concerns? What's going on?
So I don't think it's a good idea, but of course that is a personal opinion. I do understand that it's good for a lot of people because the payments are going to be lower. So that way you can afford the housing. But the interest part is what worries me. I don't know. What can you let me know about it? Like you said, nothing is specific yet, but the 50-year, at the end of the day, the interest is going to be
at the
higher.
end of 50 years.
Well, that is correct. At the end of the 50 years.
Yeah. Well, this is something we can kind of talk about forever because it brings up a lot of different thoughts and ideas. I suppose the argument would be from the powers that be that we as a society are aging more gracefully, let's say. And I think life expectancies with advancements in science and medications and what have you, people are living longer. So I'm sure one of the arguments is that, going from a 30 to a 50-year, people are now living to 70, 80, 90 years old. So there's that. But I did also just recently read a statistic that younger homeowners are almost being priced out of the market because of affordability, as you mentioned. I think I read somewhere that the average age of a homeowner over recent years is about 40 years old.
Correct, yeah.
Yeah, and the majority are actually in their 60s. So those are the folks that are really buying up property, and a lot of those people are buying them cash. They're just bypassing borrowing altogether. But yeah, my knee-jerk reaction was very similar to yours. My first concern is, although it initially addresses the aspect of monthly affordability, bringing down your housing cost by a few $100, I think a lot of the comparisons out there, which again is just at this point strictly hypothetical, because all the comparisons I have seen, most of them are comparing a 30 versus 50-year term with the same interest rate. So the first flaw there is that it's highly unlikely that a 50-year term is going to have the same interest rate of a 30-year term. Case in point, 15-year terms typically have a significantly lower interest rate than a 30-year term. Why? Because it's less risk for the lender. The longer they're letting you borrow money, the higher the risk, the higher the rate. So that's the first thing that kind of jumps out at me when I'm seeing these comparisons. There's a high probability that if a 50-year term does actually roll out, I wouldn't be surprised to see an interest rate of almost a point higher than what you would get on a 30-year. Obviously, that's speculation at this point, but that being said, with the comparisons that I am seeing with the very same interest rate, although I think it was on a $500,000 loan, it might lower your payment by like $300 a month. You're almost doubling the interest paid over the term of the loan.
$300 a month.
Yeah. Again, I've always said that in most cases, most options, in my opinion, are better than renting. But when you stretch it out to 50 years, and once you couple all these different things that we're talking about, that argument is not as strong in my eyes. So we'll see how this continues to develop. I'm not passing judgment just yet.
Right.
I think that it's great that we are having these conversations and some actual ideas are being floated. I've heard a lot of concepts of a plan for many years and decades. That's no knock to either side of the aisle. Politicians as a whole have a habit of floating empty promises. It is great that there are some ideas that are actually being talked about. I'm happy to see people getting involved in the conversation because that's how new and greater things will hopefully continue to develop. But as of right now, what I'm seeing, I'm not a huge fan of the 50-year. If it benefits you, if it can get you into something that you can afford. Something I've always said is that a lot of this talk about equity and interest and all of that, if you plan on keeping a home for a significant amount of time, a lot of that kind of falls by the wayside, right? If the affordability is there, and as long as you're buying a home that isn't a money pit, so to speak, most people statistically are going to see profit in building equity in their home. Now, obviously, the longer you stretch out that term, the higher your interest rate, the longer it's going to take to build that equity. But if you do your due diligence and you properly plan, if you're keeping a home for 10, 15, 20 years, a lot of those initial concerns kind of fall by the wayside. The trouble is nobody has a crystal ball, and it's very difficult to, no matter how certain we might be today, things change, life happens, and there's no way for us to know unequivocally whether or not we're going to remain in a certain spot. You know, life changes occur, people have build their family, you know, people separate, get divorced, unfortunately. You might have a job transfer. And the last thing you want to do is tie yourself up into a situation that presents a financial hardship. And again, that's why we have these discussions, Berlin and I, and that's why we invite you guys to get involved in the conversation. And no question is a silly question except for the one that you didn't take the time to ask, because I've seen it happen a lot where previous clients or previous referrals that maybe didn't end up doing business with me, I see it a lot with builders and builders lenders type dynamics and situations where they offer these wonderful sounding incentives. And they're like, oh, well, I'm going to go with the builder because they're giving me thousands of dollars in concessions. They're giving me this really low introductory interest rate. And then they call me a year or two after they closed, like, hey, I want to refinance. That 4% interest rate that they're giving me is now jumping up to 6 or 7%. And they find out that there's no equity in the home because they ended up buying a home that wasn't really worth the price they paid. Unfortunately, now they're stuck in a situation that they did not really do their due diligence on, and it puts them in a tough spot. Situation. We're here to help. I wish there was a one-size-fits-all fix, right? But every situation is different, and that's why it's just important to do your due diligence, ask questions, do your research, and utilize the experts that you have access to so you can do your best to make an informed decision. Berlin, any other thoughts on the 50-year mortgage?
No, like you said, we will see what happens It is a great thing for affordability, monthly payment, but I do believe that that's stretching it a little bit too much, especially when it comes to the interest.
Yeah, I can't remember the last time we had seen, I don't know how long ago it was. I guess I'm getting up there now. I'm almost 50. So I do remember, though, I want to say it was just a few years ago, but it very well could have been 5 or 10 years ago, that a 40-year term was briefly put out on the market. A few lenders were marketing a 40-year term, and just as quickly as it was
gone.
Rolled out, it disappeared. So I wouldn't mark your calendars on this one, but I've been wrong once before. So,
I mean, it might be because the prices of home is still going up. I mean, it's never going down. For Americans to afford housing, there has to be another solution, and I'm guessing.
Yeah, and even as we're talking, I think just last night or this morning, I was reading another announcement that's brand new. They're talking about portable mortgages. I'm not sure if you've heard about this, but
no.
Again, these are just literally, I think they're just brainstorming and instantly posting to their X or Twitter accounts and releasing them to the public. But yeah, the idea of a portable mortgage has also been floated, which, don't quote me on this, but from what I understand, it would be a situation where you can originate a loan, and then as you pay it off, you can use the difference to purchase a new home still at the similar terms or rate. So this would be a situation in which, like our home in Northwest Houston that I own, I think I have a 2.75% interest rate, which is great.
Yeah.
And that's almost paid off. So if that were one of these portable mortgages, again, it's still an idea, so it's developing. But from what I understand, if that were a portable mortgage, I could use that loan to go purchase another home. I'm guessing it would be similar to how a credit card works or something, a line of credit. Sounds like a great idea. I don't know how on board lenders would be, and I would assume, especially when you're talking about these lower interest rates, like somebody like me who's got something in the twos, or even people that were able to lock something in the high 1% range. I don't know how excited a lender would be about continuing to extend those lines of credit. Sounds great, but we'll see.
Actually, I like that idea.
No, I'm sure everybody loves that idea, especially people that have the lower interest rates, but we'll see how much the lenders love it.
So it's kind of like an assumable loan, pretty much.
Yes, very similar.
I did heard about that. So I'm thinking it's the same, but I just didn't heard the term portable.
Yeah.
But I did hear that we're talking about it.
Yeah, and again, it's refreshing to see these ideas floated. I don't know if they should be sharing them this quickly without really having any type of details, but we're in exciting times. I want to say crazy, but who knows? Maybe I'm just crazy for thinking it.
Well, thank you so much for sharing that information. I'm pretty sure there's a lot of people who benefit. I'm not sure if you want to talk interest rate. I don't know how it's looking as of right now. Is it better? Is it staying the same?
Rates have kind of leveled out. Rates will sometimes change daily and multiple times per day. Let's just call it what it is. Over the last 2 to now almost 3 years, the market has seen some significant shifts. A lot of buyers have been on the sidelines waiting for, I can only guess, wishful thinking of the return of 2 and 3% interest rates. And now that it has been a few years, I'm starting to see people are coming to the realization that this is where we're at, depending on what it is you're looking for and how much, where your credit is and whether or not you want to buy something down, which historically speaking is very competitive. Obviously, if you're comparing it to 2 and 3%, it's more difficult to understand. That's because a lot of us have been spoiled. We were there for so long that we thought that was normal, but it really wasn't. I mean, obviously, when rates remain that low for that long, yes, it becomes normal. Historically speaking, if you look, back 10, 20, 30 years, I'm sure if you're to talk to anybody that bought a home in the 70s or 80s, they had double-digit interest rates.
Yes.
Right? Now, homes were also much cheaper, but that's kind of the way the cookie crumbles. And there's also a big lesson in that, because As you mentioned, home prices, there's a good reason why real estate is such a popular investment, and that's because it's tried and true. And it's hopefully always going to increase in value over time. The lesson there is that regardless of what happens with interest rates, if you do your due diligence, you find the right property, you can afford it, it's a good investment because over time it will net you equity. And if and when rates do fall, you can take advantage of that by refinancing, but you can't turn back the clock and lower the price on a home, right? Okay. You can look at historical data and possibly find brief plateaus, ebbs and flows in the housing prices. Over time, it's typically rising. So unless you're in a situation where you have the option to live rent free, let's be honest, it's either pay the rent, which will continue to rise, or get in the game and build some equity.
Your own equity, not paying your landlord's equity.
Exactly. Because one way or another, you're paying a mortgage. It's either your own or your landlord, or you're just building a legacy for your landlord. I'm glad we had a chance to cover these topics. Berlin, thank you as always for sharing your time and thoughts with us. Anything to add before we go?
Guys, if anybody has questions, want to reach out with any questions, concerns, or just anything, give me a call, 941-348-9831. I'll be happy to assist you.
And if you guys have any questions regarding mortgages, financing, you want to get a second opinion, you need a quick pre-approval, I can be reached directly at 281-304-6353. You could also text me at that number. We're also going to post our links in the description. Guys, get involved in the conversation. Let us know your thoughts on these new developments. What do you think about the removal of the conventional 620 score requirement? How do you think that's going to impact or change our housing market? What are your thoughts on a convertible or portable mortgage? And then, of course, the ever popular or not so popular 50-year mortgage. Share your thoughts with us. Let's have a discussion, and we will see y'all on the next video.
Have a good one.